Hey, it's Dan McNeil with Pearson Smith Realty. I am excited to have my special guest, Chris Shead from Home Savings and Trust Mortgage, preferred lender of mine that I've worked with for quite some time and a good friend. Just wanted to first go ahead, want to say a couple things about yourself, and then we'll kind of dive into why we're here today.
All right. Thank you. Thank you, Dan, for having me. Yes, my name's Chris Shead. I've known Dan here for a little while now, and had the opportunity to work with some of his clients. And we're here today just to kind of open up the forum here to answer some of your questions and give you some updates as to how the markets have been moving. It's been a couple crazy weeks here. If any of you have been looking at the stock market or bond market for that matter, and the stimulus package that has come out, there's been a lot of activity going on, not to mention, obviously, coronavirus stuff and the implications of all of that. So as Dan mentioned, I've been in the real estate and mortgage business now for, 16, 17 years, but I kind of grew up in the business and all of it in our market here in the DMV. So I've seen a lot, seen the 2008 crisis and seeing how things are a bit different now, how this market is very different from that one. The causes of it are very different. And I think we'll be getting into that as we move forward here. But we want to have this be an interactive thing, have it be an open forum where questions can be sent over to us and we can address them, and look forward to having this interview together here.
No, I appreciate you coming on. I know we were trying to do this last week, but there was so much going on, I would say on a daily basis, but almost on an hourly basis. And
Sure,
I'm calling them like, hey, does this time work? Yes. And then 10 minutes later, no. And can you give a little insight on kind of what, I don't want to say the delay in like a bad way, but just what kind of you're going through on a hourly, daily basis, especially about a week ago?
Sure. So this really started about 2 weeks ago, where we hit the all-time lows for mortgage rates. And with that came a massive influx of refinance activity. And this is across the nation, where lenders everywhere were overwhelmed with refinance applications. And what happened was there became a liquidity crisis, kind of an issue where lenders could not handle all of the business that came in all at once. It was very, I wouldn't say necessarily unexpected, but just the volume. Each institution has only so much capacity to be able to take on refinances, because each one of those refinances has to close within a certain period of time. And so when we saw all of that, it really kind of created a log jam in the industry overall. And if there's all these refinances happening, what happens to all of the people looking to purchase? So each institution kind of changed how they did business in the short term to try and help them work through all of that. And one of those activities, or one of those decisions that they made, was raising rates. Now, this was right in line with when the Fed dropped the Fed funds rate down to 0%.
So I mean, I know you would have given me the 0% if possible, but
right.
Yeah, explain the 0%, because trust me, my phone was blowing up when people heard 0%.
Yeah.
But yeah, please explain that, just so maybe there's no more phone calls and emails on that one.
Sure. So when the Fed actually, that was their second drop in about 2 weeks. 2 weeks prior, so about a month ago, they dropped the Fed funds rate about 50 basis points, or half of 1%. That was to start stimulating. They were starting to see the economy slow down. They knew that the coronavirus was kind of on its way, and so they were trying to stimulate spending. As the coronavirus thing became a bit more of a serious issue for those of us who are in the States, they then said, okay, we're trying to offset the implication of everyone staying in their homes by dropping the Fed funds rate. Now, what does that mean? The Fed funds rate is the rate that banks charge each other overnight for borrowing money. Banks can do this transfer when, for different reasons of whether they need some liquidity to basically fund loans, or maybe there's a lot of liquidity that the other institution has, a lot of money that they have where they can afford to lend it and make a little bit of money overnight from the other institution. That's the rate that was dropped. Now, what does that mean for the consumer? What actually is directly impacted by that drop in rate? And that has everything to do with shorter term debt. Okay, overnight, it's not very long, so it's a short term loan. Well, when the Fed drops the rate like this, you'll start to see home equity lines of credit go lower in rate. You'll see car notes go lower in rate. Credit cards occasionally will be dropped a little bit in rate. Typically, debt that is on a shorter term time frame will be directly impacted by the Fed funds rate. What this does not mean is that mortgage rates went to zero. In fact, mortgage rates are typically based off of a 30-year term, right? So let's just say that's not short. That's a longer term debt. And ironically, sometimes mortgage rates actually go up when the Fed fund rate is lowered, because it's looked at as an inflationary thing where our dollar may not be worth as much in the future. So that typically on a longer term time frame is not very beneficial for lenders. And that's why they charge a higher rate typically on that. But yes, we're receiving this question all the time. Oh my gosh, can we get a 0% mortgage? No, there's no such thing as a 0% mortgage, because institutions wouldn't lend the money without having any kind of return on the investment.
Yeah,
so I'm sure all of us.
I almost felt bad because, they see 0% and all of a sudden all these people calling and texting, and I'm like, actually it's gone up.
Yes.
So it's kind of, a little bit of a shock. But of course they're so what happened was, it's kind of the unfortunate perfect storm with just everyone refinancing, and then with the coronavirus and the stocks and stuff, interest rates went up. Can you tell us, that's probably why we couldn't meet a week ago, because it was hard to be able to say minute to minute what's going on. But Can you kind of give an idea of kind of where interest rates are today?
Yes.
Knowing that as soon as this video is done, or maybe during the video, that could change.
It may change.
But that's why I plan on, I apologize for those that aren't looking for a long time, that are getting emails and texts and videos from me. But I just want to make sure everybody's updated as soon as possible, but without trying to inundate you with stuff. I just want people to know what's going on, because there's just a lot of information out there. I'm just trying to narrow it down for those, real estate market, for lending, so that way we get the information. So where are the interest rates now today? I should say, as when we started the video.
Yes, as of the time being right now, we're looking at conforming loan amounts in the low to mid 3%. And when I say a conforming loan amount, that basically means a loan amount under $510,000. Mm-hmm. Be most accurate, $510,400 if we want to be very accurate. Anything above that, you're looking in the high 3s, low 4s as of when we're recording this video.
Yeah.
So what was happening though last week, and I know, Dan, you and I kind of operate our business in the same way, where we want to advise clients with more of a conservative approach. And if the numbers can get better, that's fantastic, because that's what we want to do, is try and position our clients to take advantage of the market in what it's giving at that time. And the market is always moving. But what we were seeing last week, and why we didn't do this video, was we were seeing interest rates move 0.5% in the day.
Yeah.
So I was talking to somebody and giving them a 3.75% rate, and then 3 hours later, it's 4.25%. I mean, these swings that were happening in the market was unprecedented. We just had never seen the bond market move in such a wide range before. I mean, we're talking, let's just put it in perspective. A big movement on any regular day in the bond market is around 50 basis points. That's a big, big day. What we were seeing day after day after day are 300 basis point moves. Truly unprecedented. And what was happening was the markets overall were reacting. The stock market was dropping precipitously. It's, went down almost 10,000 points. The bond market typically is the beneficiary of that. But the bond market, people were just basically going to cash. I mean, people were very scared as to what was going on. And that's something that we can talk about there, because most people will look back at the last recession 10 years ago and, their emotions and feelings of the instability that they're seeing, it's founded on something that most of us experienced. And it was very, very tough. What we can say, though, is that this is very, very different. The cause of this movement is very different than what happened back then. Before the coronavirus was happening, and came to the U.S., we were starting to see some indications that a recessionary time was coming. And that happens in every market. In fact, it's kind of a time where the market is rebalancing, if I can, for lack of a better term, just kind of rebalancing. You can't be on an upswing forever. You can't be in growth mode forever. And we were in the longest bull market in our history since the Great Recession of 2008. So we knew that it was going to happen, and there was going to be a little bit of a pullback there as far as the overall economy. But when the coronavirus came, people started to get pretty concerned, and it just moved dramatically and very, very fast. So that being said, with the stimulus package that was just passed today, which is, again, another reason why we wanted to hold off on our meeting here.
A few hours ago, yep.
Was to see how that is going to impact the economy. Thankfully, I think that there's going to be a lot of artificially holding rates in a place where they're going to still be attractive. And Dan, I don't know about you, but I'm probably going to want to ask you what you're seeing on the real estate side of things, just kind of boots on the ground, and in our area, because I find that what we're looking at is national, but real estate is very regional.
Yeah, and for Northern Virginia, it's I almost feel like it's insulated from almost everything else, especially like you said, it's different than 2008. Where right now the supply and demand is just, there's still low supply, and there's people around here that have to move, and there's just still not enough houses. And I've got some stats that I'll go over, what, new properties, houses that have been pulled off, but you're still seeing multiple bids. Because one of the questions I had from somebody was, are you seeing sellers paying closing costs? That used to happen years ago, which kind of went away in the last couple of years, because people were going above asking price, and some people
sellers market.
So they don't have the closing costs, so they would ask the sellers to pay closing costs, but when there's multiple bids, it's going to count against you. So as of right now, even with all this going on, we're still seeing multiple bids, and the prices aren't dropping. I mean, obviously it's just a unique situation right now where there are less people looking, just because of not wanting to go out or being told to stay in, which is a good, safe thing. There's people worried about, health. So there's things we're doing that I'll talk about later, where basically you can sit at your house and buy a home. But of course, there's people that want to be able to see the house, smell the house, open cabinets and things like that. And those people, they're probably going to wait and put that off for a couple of months. But it's still, the inventory is so low compared to people that are looking. I have a couple people that were under contract that, locked in rates. One was, 2.75, but it was, week before it was the bottom.
It was right at the bottom. They did that last 2 Mondays ago.
Perfect.
Yep.
timing for that. And so they locked in. If they were to go right now, their rate would be 3.5%. And we ran the numbers to buy points to lower that down. It would have been over $14,000.
Yeah.
It was over the course of a 30-year loan. It was over $100,000. So that's like the real money difference with that difference in rate. But for housing purposes, there's still not enough homes out there. One of the things Eric Pearson, one of the owners for Pearson Smith, has said is that, he feels that things are basically going to shift a couple months, and maybe summer, fall is going to be like the spring, summer that we're used to.
Yeah.
So hopefully, the virus, that part of it is done sooner than later. But yeah, I see a lot of people, once it's all done, obviously wanting to get out of their house and get outside, but maybe at that point are looking for a new home. So kind of in general, where are the actual rates last you looked today?
Oh, so they're still there. I mean, kind of that mid-3 range. But what I wanted to mention is when comparing the value of homes now to, because there's a lot of concern, people have mentioned the term bubble. There's another bubble coming in the real estate market. I want to put people at ease of really what is the difference and how did they determine value before versus now? And that had a lot to do with the financing side of it. Obviously, appraisals were coming in, and quite frankly, they were fraudulent without the lack of regulation and oversight that was happening, 12, 13 years ago. But also loans that were being written were not being verified. Income was not being verified. Credit not being verified in some cases. You didn't have to have a job in some of these loan programs that were out there in the marketplace. I mean, crazy, crazy stuff. The reason this is different and why the housing market is different and quite frankly very solid is because of all of the checks and balances that came after that crisis. There is no such thing as a stated income, stated asset loan anymore. There's no such thing as a no income, no asset loan anymore. The fact that they ever were there is just crazy to me, but everything now is documented. If people cannot afford homes, they cannot buy them. That is unlike what happened in the last downturn. So people really need to understand that. It's very, very important that the fundamentals are night and day difference. So then we talk about what you had mentioned, Dan, is the lack of inventory is basic economics, supply and demand. Well, if there's a limited supply, then the demand is going to be increased and therefore prices are going to go up. But it's a matter of trying to position yourself and understanding what the market's doing at that time to make sure, and then specific to the individual's plan of how long do they see themselves in the home, and do they plan to keep it as a rental or maybe sell the home and springboard to the next home. It just has everything to do with what makes sense for the individual and how we can customize that experience and customize the financing to benefit them in the long run. Because the goal always is, let's try and help our clients create wealth.
Well, that's why one of the things I tell them is before they're getting their pre-approval, they might get pre-approved for say 500,000, but I always tell them, figure out what you're comfortable with, because the last thing I want to do is, as much as I want to resell that house down the road, I want it 5-10 years down the road, not 6 months down the road when they can't afford it. So
Right.
What you get approved for might not necessarily be, I remember when I went to go buy a home, they approved us for like $200,000 more than we were, like, I don't know how we would have lived. And I tell people, I want you to live in your house, not have to get a second job and not be able to live there. So that is one of the conversations I have. And, I know that's a conversation you have with people as well, which is,
It is. One of the things I talk about all the time is most people will find that they'll get pre-approved for a lot more than they want. And if anything positive came from that downturn, it's the people did tend to look at their finances a little bit more conservatively and looking at it more of here's what we need versus what we want.
Yeah.
And that's a very wise thing. So when we talk to our clients, obviously we want to get them the best the best terms and things possible. But what we'll also look at is where the ratios are. What does that debt load look like? We don't want them eating ramen noodles every night with their family. I mean, this is a big piece of the overall financial puzzle that needs to be secured and be a bedrock of anyone's personal wealth portfolio, if we want to put it that way.
I have a few questions that people would ask, but also some stuff I wanted to ask, knowing, I don't know, just good information. So
sure.
I don't mean to like cut you off with anything, but if you talk on something, I want to make sure I check my stuff off. So one of the things that I wanted you to talk about is kind of the difference between pre-qualification and pre-approval.
Yes, that's a good one.
Because I get different letters from different places, and they're way different.
To keep things very simple, pre-approval is what you want to have. A pre-approval means that your credit has been reviewed, that your financial documents have been reviewed, and basically all the hard work has been done up front before you start putting offers in on homes. Basically, you are pretty secure in the understanding that you're going to get this type of financing that you're writing. A pre-qualification is very different. There are a number of larger institutions out there that will say, put some numbers in this calculation, and there'll be an automated pre-qualification letter that'll spit back out to you. And some people will use those in putting offers in on homes. And it's not that people are trying to get over or be, fraudulent in their own ways, but sometimes people think that they actually make more money than what a lender can actually use to qualify them. This specifically happens for self-employed people, for people who work in an environment where income can fluctuate, like you and I, Dan.
Yeah.
We kind of work in a commission-based environment. So it's not just a matter of how much you made last month, it's a matter of how much you've made on an average over the last 2 years.
Yeah.
And that can really change things. So I would say it's imperative to get a pre-approval done. Doing the hard work up front saves you a lot of heartache and stress on the back end. So,
well, the one good thing I like about you and being able to work with a local lender is just being able to have that conversation with people, as opposed to getting a piece of paper that is printed out that they've never talked to anyone about. It's got a name at the bottom. Usually it's to a call center. But being able to have the conversation with me and then having a conversation with you and actually getting to understand what the people are actually looking for, and just being able to give good advice.
Exactly.
Putting the numbers into the system. I've had a approval for $500,000 that got printed out, and then when it came time to getting actual approved, they were down to like $200,000. So and the houses they want to look at are $500,000, and that $200,000 house does not look attractive anymore once they've done that. So
that's right.
So that kind of, I'm going to kind of go on because a bunch of people are asking, I still want to look at homes. I still want to buy. What is your advice for people that are looking to buy in the next 0 to 3 months from your side?
Sure. It's very simple. You want to get pre-approved up front. It's one of the first things that you need to do. Let's just put it this way. Our market is moving so quickly, and we already talked about the inventory. The time frame that homes are staying on the market is typically not very long.
No.
And so what a lot of people will say is, well, if I find the right house, then I'll do this. The fact of the matter is the home won't be there by the time you do this and get your pre-approval letter. Most institutions will take a day or two to turn around and do a true pre-approval where, in essence, we're doing a pre-underwrite of your loan.
Yeah.
And that is what listing agents want to see. Those agents who are representing sellers, they want to see that clients have actually done their due diligence in making sure that the offer that is being received has already technically been pre-approved. Okay. So what I would tell people in that 1 to 3 month time frame is get your ducks in a row. It will make all the difference in the whole experience overall. And what I found is, as we educate people, it does make a lot of sense on why it's done a certain way. And at the end of the day, it's all looking out for them. What is the point of showing homes and wasting your time, Dan, driving around showing homes at 400,000 when they can't purchase over 300,000? It's a waste of everybody's time, and it's heartbreaking for the buyer. They fall in love with a $400,000 home that it's just like dangling a candy out there and just saying, nope, you can't have it now.
Yeah.
Doing the correct steps first is just imperative, especially in a market that moves as quickly as ours is.
Yeah, because we do have to have the pre-approval letter with an offer, or it won't be accepted. And the thing is, they will call, almost everyone, well, at least, good agents out there will call and verify that they have gone through the pre-approval process.
Right.
I will say I've gotten quite a few pre-approvals from you at very odd hours of the evening and weekends. So
don't tell everybody that, Dan.
I know, not a 9-to-5 job, but I appreciate. So I'm going to go on just kind of what people that still want to look. They've asked me like, hey, I've seen houses, I still want to go take a look, or I still want to buy, but I don't want to leave my house. All those things are understandable. So so the big things that we've put in place, and they've kind of been there before, but again, most people like to open the drawers and, look in the oven, or,
that's right. Get their own feels out there.
Yeah. But you could buy a house by sitting in yours. So the one thing, Virginia governor, I'm only licensed in Virginia. Obviously, if someone wants Maryland, DC, West Virginia, I've got a lot of great friends that are licensed. But for Virginia governor, he said, only essential personnel supposed to be working. Luckily, we are essential, which is nice. It was a good feeling. But a lot of people are asking, like, how are we conducting business now? The biggest thing, and I even said this when it first started, I told people, it was kind of my opinion, but I'm like, I'm avoiding open houses. I do not want to go. When they said 10 or less people, Eric made the call that, just company-wide, we're not hosting open houses. Some people are like, what if we put someone at the front door and have like a bodyguard? But I don't think that's as open. It doesn't sound very open to me.
Yeah.
So we're doing virtual showings for those that don't want to go out, or people that are selling their house. So we will take a video, go through. We'll still have the professional photos done. The one thing is, if you're a buyer, we just have to ask permission and get written permission from the owner or the listing agent to be able to go in and take a video. And if I take a video for you, that doesn't mean you put it on Facebook and disperse it. It is just for you only. So there are the local realtor associations and Bright MLS and Realtor, they've all been very good at making changes as we've gone along just in the last like 3 weeks. So the virtual showings are huge. We've got, just regular meetings. We can either do a Zoom meeting, FaceTime Live, talking on the phone, obviously for setup. But then home search, obviously, just setting that up for you, making sure what you were looking for specifically can be narrowed down to minimum bedrooms, bathrooms, square footage, garage spaces, school districts, any of those type of things. So obviously you don't have to leave the house to take a look at what's out there. But then being able to do the virtual tours. Then you see a place that you like. We've got addendums. We've got the offer. All that stuff can be done electronically. Is done electronically 99.9% of the time. There's still people that want to put, pen on paper. We can do that too. But in these times, electronic signatures is, mostly used anyhow. So also EMD, I know with Champion Title, They've got an app. You take a picture of the check for the earnest money deposit. It gets deposited, and then everyone gets their receipt of that sent to the listing agent, buying agent, so everybody knows that that's been paid. So that can be done electronically. Inspections, all my inspectors that I work with are still currently doing inspections. They have recommended other people not really come if possible.
Right.
I usually like being there for the inspection, but that could be a virtual inspection as well. So I can be there and you get a full written report, and trust me, the inspectors are going through every single thing.
Yes.
Most people kind of get shell shocked when you get the inspection, but that's their job. So I can FaceTime through that. Settlement, if you're paying cash, you can pay with, or you can actually, everything can be done electronically with that. You can have a notary, just like what we're doing here, where they're there, they check off when you're signing stuff. If you're not paying cash with Champion Title, like I have a closing next Friday, I'm a little bummed because I always like being there for the closings. I know you do too, but they have asked that only whoever is signing
To be
be there for the closing. So it's going to be a notary at the other end of the 6-foot table, going through all the paperwork. So all that gets done. Keys get taken care of. I will, if I need to drop off keys at your current house, that can be taken care of. So you could technically buy a house sitting at home. So any of those options that anyone needs, that's what I'm here for. We also have an addendum, a COVID-19 addendum that allows for extension of settlement. If something went down, because some people have talked about courts closing where they're only essential personnel. Most of the counties in Northern Virginia have,
open.
yeah, they have essential personnel, so they have electronic filings. So we don't have to worry about the title being put into the courthouse and having that recorded. That can take place as long as the essential personnel is there. But if it happens, they shut everything down and you're in the process of a settlement, you're a week away, and they say 14 days, this will actually give an extension for that settlement. And you have a certain number of days, say it's 30 days to be able to settle, but it's one of those where it's at no fault of anyone else. So given the courts close, the title company closes, we can't work, it actually can extend that settlement date because it's no fault at anyone else's. Mm-hmm. So that's kind of what we've got. Another question we had: where do you see interest rates going longer term?
Yeah,
I know you got the crystal ball in front of you.
So, well, I think let's just say over the next year, I find that interest rates are still going to be in a very favorable place. With the stimulation, the stimulus that's happened, that helps out a lot. But even if that didn't happen, the fact that we were starting to get into a little bit of a recession, recessionary period, let's just say, is a kind of a pullback. I don't want to say recession and scare people. That's
it could be the headlines on the news station.
Exactly. I mean, recessions are normal. Recessions are actually an indication of a healthy market, believe it or not. So it's all in helping educate people, knowing that, okay, a recessionary time was overdue. And now that we may be going into that is going to be typically a time where interest rates will stay at a reasonable level, allowing people to borrow money for lower cost and continue to move the economy forward. And I do see that that's going to be the case for the foreseeable future. We always talk about advancements in technology, where that will play a pivotal role and will continue to play a pivotal role as we move forward and how we work and what we do. I mean, even right now, the technology, we're having this kind of conversation that was not available just a few years ago. So when you look at all of these factors, and then we look at, again, our area, the stability in the real estate market, you're going to find through this whole time frame is that real estate is probably going to be one of the most unaffected and secure asset classes that went through this whole time period. And a lot of that had to do with because it was such a disaster in the Great Recession of 2008.
Yeah.
There was just so many things that got put in place to make sure that nothing like that would ever happen again. That's why I can say pretty confidently that the housing market was incredibly strong moving into this downturn, and it maintains that way, certainly in our area.
Well, that's one of the things regarding that pre-qualification, versus pre-approval is like, I have never seen someone actually be pre-approved for the amount their pre-qualification was. And it's
never mirrored each other, right?
Never has mirrored. And I mean, part of that is the fact of, you're actually going through the process to see what they're actually qualified for, as opposed to kind of basic information that someone can put a wrong number in and get some crazy number.
Right.
So
it's doing the job right the first time. That's really what it is.
Yeah. All right. So kind of the last thing I wanted to talk about, I think a lot of people had questions, but they were all kind of centered around a certain question. I just wanted to kind of go over with everybody just the straight numbers on the housing market for Northern Virginia. And basically I went from kind of Clark County up in Virginia. So coming soon, and this is just over the last 7 days, coming soon, 370 homes. Active, 1,098 homes. Back to active, 284 homes. Under contract, 518. Pending, 895, which pending means it's under contract for the most part. Closed, 939 homes. Temporary off, 314. Withdrawn, 149. And canceled, 52. With those temporary off, withdrawal, and canceled, I know I list the rentals for our property management. So I'll have stuff on temporary off when I first put it in, and then when it's ready to go live, I click the live button. So that doesn't mean that it was taken off. Withdrawn means that it was taken fully off the market. That can be that, without going into too much detail, it could be it was just sitting on the market too long, maybe it was overpriced and they decided not to sell, or it could be current situation. I do have some people that, are waiting a couple months to see, how all this shakes out. So, some of those numbers have a little bit more caveats to it. But again, there's just not enough inventory out there for what people are looking for still. So it's going to keep those housing prices where they're at. But it's also one of those things where if you're looking to move, if you're going to sell high, you're going to buy high. If you're going to sell low, you're going to end up buying low, most likely, unless you're in a big change, unless you've got a 3-bedroom, 2-bath townhome in Ashburn and you're looking to move to, $1.5 million place. You might get a better deal price-wise, like drop-wise on the higher amount, and you might get more for that townhome just because the need is there for that style and size and location. But the housing market is still, it's like its own little shelled thing from all of this. And I appreciate you coming on for the interview. It's always loved. I talk to you every day, so that's not out of the norm.
Yeah.
But usually it's quick, short conversations and questions. But anything else you would have to say before we end our conversation?
Sure. I would again say, and thank you again, Dan, for having me here. I think cool heads need to prevail. We as a society, we're going to get through this time. It's uncomfortable right now. I'm sure a lot of us are going nuts, staying in our homes. And, certainly in Virginia, when we heard that the kids were not going back to school this year, like, man, what are we going to do?
5-month summer break.
That's right. But things are going to be working out, even through these massive swings that we're seeing in the market. Our economy is resilient. It's absolutely necessary on a global level. And looking at the value of where we are in the industry that we're talking about here. When the federal government is the nation's largest employer and it's in our backyard, that will help real estate. When you see the economic activity of Amazon coming in and others, you know, Hilton came in years ago, but I mean, seeing certainly that Northern Virginia is a very positive and powerful place for companies to move, you're seeing that real estate will always follow solid job environments. And the fact that we are projecting an additional 1.2 million people increased over the next 20 years to our area, that bodes well for the housing market in our area. And when I say 1.2 million people, we know that the federal government is pretty transient. We know that every 4 years, the potential for a new administration is there to come in. We talk about military and the comings and goings of and orders of being transferred out here and there. When I say 1.2 net increase, 1.2 million more people, that does not mean that one person left and one person came in. That's a net zero. That means nothing, we didn't grow at all. What I'm talking about is after all of that transient activity over the next 20 years, 1.2 million more people.
You need to clear out your basement.
That's, yeah, there's going to be a need for real estate. And all indications show that it is solid right now. Take advantage of it while the rates are doing what they're doing, and make sure that you're doing it in the right way. Give Dan a call, ask him what's happening in certain areas specific to where you are looking. And if I can be of any assistance to you, I'm happy to be that. So Dan, thanks again, buddy. I appreciate you taking the time, and hopefully some people got some good information out of this.
Yes, so I appreciate it, and I'm sure I'll talk to you later because that's just the normal thing. But I appreciate everyone for all the questions that you sent in. And like I said, if you need anything, let us know. Do you want to throw out your phone number? Or?
Sure. I can be reached at 703-498-8235. And please let me know where you, if it was from the video that you heard about me, please mention it, because I always want to thank those that have been referred to me, but also, and so that I know that Dan and I were beneficial to you. And then my email address is cshead, so that's CSHEAD as in David, at hstmortgage.com.
Awesome. Well, again, I appreciate it, and I'll talk to you soon. And
right,
I'm sure
Dan.
we'll do one of these as things change.
That's a promise. Sounds good.
Thank you, sir. Have a good day.
Take care. Thank you, everybody.
Bye, everybody.